everyone, Donna here from Mortgage Powered Financial Group, and welcome back to the Mortgage Sweet Spot Lender Edition. This series is where we sit down with our lending partners to break down real policy, real files, and conversations brokers don't always get to hear. Every lender has their strengths, their quirks, and their behind-the-scenes magic. Better deals, better relationships, and better results. Let's jump in. Justin.
Hey.
I am so excited to have you here.
Oh, thanks for having me. I know we've been talking about this, so I'm excited.
How's your Monday?
Monday's great. I'm in a podcast studio with you. What more could I ask for a Monday afternoon?
So for anybody who hasn't met you or doesn't know who you are you and where are you from?
So my name is Justin Theriault. I'm the Director of Business Development for Eastern Canada at ThreePoint Capital. So we are a mortgage investment corporation based out of Kelowna, BC. So we actually lend in Ontario, Alberta, and BC. So it gives you that little bit of flexibility that if you have out of province deals. So myself, I deal with Ontario. My colleague Lauren works out west. A little bit about background about myself. I mean, I've been in the industry for about 2026, about 10 years now.
You're old.
I mean, I'm still a rising star, apparently, according to all these awards and everything. So, yeah, I mean, started my career at B2B Bank, kind of bounced around the A space, the B space, and now I've been in the private side for about 5-6 years now. So I think kind of found my niche. This is kind of where I like to be. I like to be able to help, brokers and agents with, the little bit tougher deals to place. And yeah, that's kind of a little bit about myself in a nutshell. I'm born and raised in Ottawa, met my wife there and moved back to the GTA. And now I'm a country boy just outside of Orangeville.
Wow. Okay. That's a lot. For those who don't know, what's a MIC?
A mortgage investment corporation, or a MIC, is a lender that kind of falls outside of the B20 rules, for those of you that know that. So you have your traditional banks, your monolines, or A and B lenders that we like to categorize them. On the private side, so a mortgage investment corporation, we're able to kind of skirt some of those rules and regulations that are put in place by the regulators. So anyone that, might have income challenges, they might have credit challenges, different types of properties and stuff like that. I mean, obviously the common misconception, I would say, for mortgage investment corporations is that it's only for those clients that, have bad credit scores or they don't have income and stuff like that. But I mean, in our case at ThreePoint Capital, like, we have a lot of clients that on paper, especially call it 2-3 years ago, might have looked like someone that is a bankable client that can get approved at a bank because they have great credit, they have great income, but for whatever reason, they're kind of falling outside of that box in this day and age, which is with the rate environment that we're in and the market that we're seeing.
The stress test is terrible. What's your average weekend score? Do you know?
So our average credit score, surprisingly, is actually, I think last I checked, was about 711.
That's actually not surprising. I was just at a conference and we had a couple of MICs on stage. One of them was 722. It's not uncommon. Because of the stress test, more people are pushed out of the alt space and the A space, and there's a lot of room for you guys, I think. Yeah,
I know that they just actually announced just the other day that they're keeping that same stress test at 525 or contract plus 2%. I kind of tend to disagree with that. I think, in a low rate environment that we were seeing, like, obviously clients were getting these insanely cheap rates. Like, I think when I got my mortgage at RBC, I was at prime minus 105. So I was at 1.4%. So like, it was like the banks were giving away free money. So I understand the stress test in that situation. But when we're seeing, contract rates like in the 4s, in some cases on the alternative side, like in the 5-6% range, like, I personally don't think that we need a stress test like that high.
I think going back to, the 2020, 2021, when we had the height of the market where interest rates were basically free, I think there was a point in the stress test. And I think we're realizing it now because those mortgages went from, 1.89% to 5%.
Yeah.
And if we hadn't had the stress test at 5.25%, I think we would see more trouble today than what we did.
Yeah.
Speaking of trouble, what do you think is going to happen in the mortgage space in the next 12 months?
I mean, people are still predicting that we quite haven't seen the bottom yet. I mean, I think I saw a stat the other day that like new home sales in the GTA have dropped year over year by 80%. And that is like honestly quite alarming to me. I think people are still kind of like sitting on the sidelines. I mean, affordability is still at an all-time low. I think like people are just...
Is affordability low or qualifying low? Because I think there are people that want to buy houses, but there's no houses for them to buy. Yeah,
for sure. I mean, I think like even myself, like when we were looking to buy our first house, like back in, I think it was 2018, 2019 range, like we were renting a townhouse in Oakville and we were paying close to $3,000 a month. But I could barely scrape by qualifying for like a $300,000 mortgage, which to me, I was like, my payment is half of what I'm paying in rent, but I can't qualify at the bank.
I went to buy a car not too long ago and they didn't even ask me for a pay stub. Can't get a mortgage, but you can get a car with a ridiculous monthly payment. It's absolutely insane.
Yeah.
My husband and I sold our house in 2021 and we decided to go backwards.
Yeah.
And we sold first with the intention of buying, not realizing that the market would do exactly what the market did. There was one house available for us to buy in the entire city. So now we're living in a house that we both cannot stand because we had no choice. And now the values of the houses have come down and I refuse to sell because where do you go next?
It's definitely tough out there. I mean, for me personally, just like, so many people come to me, like friends and family, asking me about, mortgages. And even my wife, like we joke about, like we chose variable back in 2020 when we bought our last house. And as the rates went up and as the Bank of Canada kept saying like, oh, rates are going to be around this for a long time, like go buy. And then, we started seeing that uptick. Like she was like, should we lock in? And I'm like, no, like Bank of Canada is saying like, we're going to stay here.
Got caught
like
in that mess.
Let's just ride the wave. And then it's like, it went up and up and up. And she's like, you're in the mortgage industry and you can predict this. And now we're paying interest only payments.
I joke now and I say that I only did 2 variable rate mortgages during that ridiculous free rate mortgage space. And both of them were out of necessity because they couldn't qualify for a fixed rate at the time. And both of them got in trouble. Like one of their amortizations, because they didn't listen and make the payment increases and adjust their payments, one of their amortizations went to 71 years. By the time their mortgage was up for renewal, it was crazy.
Yeah, I mean, it's disappointing to see. I feel like the credit box is like shrinking and shrinking and shrinking. Like even being on the private side for the last 5 years, like even seeing like alternative lenders and like OSFI coming into play and like changing these rules where even alternative lenders now, like they used to have, like call it a 6-month bank statement program. Now, because of OSFI and those things, now it's a 12-month bank statements program. In some cases, it's a 24-month bank statement program. So all these credit boxes are shrinking and we're starting to see more and more clients having to come to a mortgage investment corporation like ThreePoint, which, I mean, in my case, being a sales guy, great, I'm seeing more deals, but you're seeing clients that you would hope and pray that they could get a traditional mortgage through a bank, but they're having to do that transitional.
But sometimes it's the path of least resistance, right?
100%, yeah.
Speaking of 3-Point Capital, we all know that you are our favorite here at MPFG.
I appreciate that.
But what type of clients are best suited for 3-Point?
I would honestly call ourselves a transitional lender. And what I mean by that is, those types of clients that, have decent credit. So like usually for us, we usually say like we'd like to see at least a 600 plus beacon score. If the income is there, but maybe they're just on the cusp of qualifying like at an alternative lender or an A lender. Maybe it's a ratio thing because lenders, like they have those.
But you care about ratios?
We don't personally at ThreePoint, but let's say, for example,
so then why does it matter?
Well, for us, it's in the sense that, there's someone that, let's just throw out like an alternative lender might be like 55 GDS TDS, and you have a client, you have a file that you're looking at it, and it's like, my TDS is at 60. It's like so close to qualifying at a B lender. Whereas with us, because we don't care about ratios, like that's the type of client that we're seeing. That's like, they're just on the cusp, whether it's an income thing, maybe it's a credit thing, come to us, and like we offer fully flexible terms. So like we do a 1-year term, but it's a fully open product. So it gives them that flexibility to, get the house or do the refinance that they need to clean up their credit or whatever the situation might be. And you're able to refinance them out to a B lender or an A lender, and get them, the mortgage that they were hoping for in a short period. So what I'm hearing
is ThreePoint really likes exit strategy.
Correct. Yes. We are big on exit strategy. So we're someone that we don't do income verification.
At all?
Nope, not at all. So we don't ask for bank statements. We don't ask for business financials. We don't ask for T4s or anything like that. Really, the only type of documentation that we typically are concerned about is that they're up to date with their taxes. Because obviously a CRA lien supersedes our mortgages. So that's really the only thing that we look for. So like a typical document package for us is basically an appraisal, an NOA or a statement of account, and IDs for like FinTrack compliance purposes. And that's really it. So it gives you that flexibility where, there's some cases where, clients are very picky and like they're super hard to deal with, and you start asking them for the litany of documents that an A lender or a B lender is going to ask for. And they say, you know what, Donna, I don't want to provide you 2 years of business financials. I don't want to provide you 12 months worth of business bank statements.
No docs, no talks, buddy.
Yeah. So with us, it gives you that flexibility where, you might have a deal like that where a client's a little tough to deal with, and you can be assured that, maybe I send that to ThreePoint. It's a transitional period where I can kind of coach the client saying like, hey, if you want a much better rate, you're going to have to provide me these things. But if you want to go down this route, I can get you a deal with ThreePoint. It's going to be a little bit more expensive, but I'm not going to pull teeth and try and get all these documents for you because they don't require that stuff.
If you could wave your magic wand and fix a broker specific submission issue, what would it be?
I think brokers and agents are so minded in the fact that I don't want to provide you all the nitty gritty details about a deal because they're so used to not doing that with an A lender or a B lender where it's I'm only going to give you a little bit of the story because I really want to make sure that this gets over the hump.
But I think that, with ThreePoint in particular, you guys are reasonable.
Yeah.
And I think that if brokers came to the table with the true story,
yeah, and
were honest and upfront, your underwriting would be done faster.
100%.
And a lot of the time you guys would approve the file anyways, because most of what we think is scary is irrelevant.
100%.
Because you're really just property specific, aren't you?
Yeah, I mean, a lot of privates are heavy on property and not so much on client profile. I don't want to say we're the opposite compared to a lot of privates where we care more about the client profile. Obviously the property is a big deal for us.
But you do though. You're not the type of your clients matter to you just as much as your property
100%.
does. But I think that from a broker working with a MIC, that's preferable because our job is to make sure that we can take the client from ThreePoint and put them into the alternative space or preferably the A space if possible.
100%.
So the more, I don't want to use the word picky, but the more selective you are on your end, the easier it is for us to transition them out.
Yeah, 100%. For us, our underwriters and even at renewal, we actually if someone is going to renew with ThreePoint, our renewal specialists still ask hey, the exit strategies that you gave us when you brought them to us, is that still relevant today or has that exit strategy changed?
Because we can control it, right?
Yeah.
I'm going to stop buying Starbucks and I'm going to pay my credit card on time and we're just going to remove
for sure. I mean,
it never happens.
Some clients are definitely hard to coach. I mean, obviously you come up with this plan and exit strategy with them and sometimes they listen, sometimes they don't.
That's why we have this really cool document now called exit strategy that we have the client sign.
Yeah.
So when they don't do the thing things that they promise that they're going to do. It's not on either of us.
And the good thing about 3Point is, let's say the client doesn't quite listen to that exit strategy and they do have to renew with us. You can rest assured that 3Point is a lender that gives the opportunity to the client to
it's written right in your commitment, isn't it?
100%. Whereas
and it's a flat fee, no?
Yep. So the biggest thing that I always say to keep an eye for, especially if you're not someone that does a whole lot of privates, is looking at that renewal, the terms and conditions of a renewal with that lender. Because there's a lot of predatory lending out there, especially at renewal where, there's all these crazy back end fees, renewal fees and stuff like that.
One of the things I like most about working with 3Point is you guys are very transparent. Mm-hmm. So you do offer renewals written right in your contract if the mortgage is paid on time as agreed. Yep. You are the cost to get out of the mortgage is actually less expensive than the cost to get into the mortgage, and it's right in your commitment. So there are no surprises, which makes it easy. A lot of younger brokers or inexperienced brokers don't value that. They just, they look at the interest rates, and there are a couple of lenders that come to mind. They look at the interest rate and the interest rate might be less expensive, but then when we try to exit them on the other side, the cost to get them out is 3% and 4%, which we didn't take into consideration. And that makes us look really terrible.
I've definitely coached a lot of agents and brokers out there that have come to me saying hey, I have this client, I have this deal. I'll be transparent. I did get a quote from XYZ lender. Can you beat it or match it? And then I look at it and it's okay, yeah, sure. That rate looks a little bit better than what we're offering, but did you look at this, and this?
I have an issue with that too, though. As agents and brokers, we should know our lending partners.
Yeah. Why
are we shopping? Why are we getting a quote from one lender and taking it to another lender to see if they're going to match? Why not just figure out what's best suited for your client and go there first?
Yeah, for sure. And that's honestly one of the big things with 3Point and what we've kind of established ourselves as is we're a lender that wants to work with brokerages and agents and brokers like yourselves at MPFG that understand the business. They know the lenders. They want to build lasting relationships with those lenders. Whereas there's agents out there that, they have 100 different lenders that they deal with and they just kind of throw stuff.
I'm going to go off on a tangent, but on the weekend I was at an event and I got in front of a VP of this large lender. And whenever we want discretionary pricing, they want us to come to them with a rate offered somewhere else. And I basically said to him, I'm so let me understand this. You want me to take this client and send it to another lender, have the other lender underwrite it and issue a commitment, and then give you the commitment so that you can match or beat that commitment. How would you like it if we did that to you?
Yeah.
He's I see your point. I'm so something's broken. Yeah. You're not going to accept a rate sheet to show that the rate is better. You have the client profile. We've submitted the file to you, but you literally want to waste somebody's time. I will stand on a soapbox longer and say it costs an average of $1,700 for a lender to issue a commitment. $1,700 is a lot of money if it doesn't close. Yeah. Right? So we as brokers have to do a better job of understanding our lender. Pick up the phone.
For sure.
I've never not called you, or I've never called you and not gotten a phone call back. Right?
Yeah, I'm still surprised, honestly, to this day. Being in sales for a long time, when agents call me and they're like, "Oh my God, you actually picked up your phone," and it's what do you mean? That's
my job.
That's literally my whole job. And it's well, I called so and so from XYZ, and it's been 3 days, and I still haven't gotten a phone call back.
So, can you talk to me about a call that you might have gotten from an agent where they deal ran, so they called you with a scenario, and you were able to come up with a creative solution to present the file to get it approved?
Being on the private side, I feel no deal is the same, honestly. So, there's a couple situations, especially for agents that are not super well versed in privates. There's actually been a few situations where we've actually been able to approve it.
What about last week when I called you and I said, I have this client, he's buying this house, it's a fixer upper. Yeah. The property itself didn't look fabulous, but I told you he had another property and you suggested that was free and clear. And you suggested that we blanket that, right?
Yeah. So, the fact that I've kind of worked on every side of the business, being on the A, B, and now private side, I've never held the title of an underwriter. I've never worked as an underwriter for a lender, but I would say like I'm pretty well versed across the board in terms of trying to find, specific solutions to.
I wouldn't have thought of blanketing the property.
Yeah. So, I mean, in this case, it was kind of a fixer upper because there was water damage and like they've had to rip out a bunch of drywall and stuff like that, where, a lender might look at that and look at the appraisal and be like, I don't really want to touch that property. Or if we're going to touch that property, it's going to be super low loan to value. And it might not be beneficial to the client because the client wants to obviously maximize his down payment and his savings to actually fix that place up. So when you had mentioned, well, he actually has a free and clear property, well, that actually helps quite a bit because now we have security on an additional property. It actually lowers the loan to value substantially and it gives us a little bit more comfortability.
I mean, if we were honest, I didn't tell you he had a free and clear property. You asked me if there were any other assets and I was like, well, he does have a property down the street.
Yeah.
So if I hadn't picked up the phone and had this conversation with you, I probably would have taken it to an actual private lender. I would have paid double the interest rate and double the fees.
Yeah.
But because I picked up the phone and we had a conversation, you were able to restructure that deal. And that's one of the really good things about ThreePoint, because I've seen a lot of deals get done that I didn't think could get done with just a little bit of common sense. So I really appreciate that. Like,
I am someone that loves to find solutions to deals. Even if it's not necessarily something that's going to come to me. Like, I've had several situations where an agent calls me and says like, hey, like this is the deal that I'm working with. And, I submitted it to one B lender and they refused it. So like, do you think ThreePoint could do it? And I kind of like go through it and I'm like, well, having worked at Home Trust in the past, like, I'm like, yeah, sure. Like maybe Equitable doesn't want to do this deal, but like, have you tried?
But you've done that with me too.
Yeah,
you
for sure.
You told me to call and it wasn't Ghostbusters.
Yeah.
Are you guys coming up with anything fun or anything new and innovative?
Product innovation is always something that we're always looking at. I'm always looking at market intel. Like, I'm someone that really likes to know what my competitors are doing out there and getting feedback from our agents and our broker partners.
Does that mean my shoes are coming in the mail?
Yeah, custom pair of shoes. You never know. I mean, everyone loves our socks.
I mean, I'm wearing them right now.
There you go. So the answer to that would be yes. Yes,
I am getting new shoes.
If you want a pair of new shoes, yeah. I mean,
what about line of credit? Everybody wants line of credit on the mix side. Do you think that we'll ever see that with ThreePoint?
Like, we've thought about it. We've talked to our competitors that offer it. It's something that we've noodled around. I would say the more likely product innovation would be higher LTVs. So like your
max LTV right now is 75. Yes.
Yeah. So our max LTV has always been 75.
Is that province wide or location specific?
No, countrywide. It's always just kind of
in Norfolk, you'll do 75?
Yeah. Like, we're a little bit more flexible than a lot of private lenders, where if it's a specific geographic location, you start seeing scale back. So funny enough, like there's one of our competitors that has asked me about some of the deals that we do, and like, they see that we do a lot of business with certain brokerages in certain locations. And they're like, do you guys like offer that kind of stuff like in that area? And that's like, yeah, we do, because, client profile is good. The property looks good. It makes sense to us. So like, we're not just going to arbitrarily scale back our loan to values because it's in Chatham, for example.
I understand that you have Ontario, Alberta, and BC. Your underwriting department is in BC?
Yep.
Okay. And so they don't know Ontario.
When I had first joined, 100%, I would say that we were a lot more conservative when it came to different locations and stuff like that in Ontario, which is kind of one of the things that I mandated when I first joined was, I've been in this industry for a long time. I've lived and breathed Ontario market. So I would hope that there's a little bit more grace and leeway in terms of like underwriters coming to me.
Let's brag about you in ThreePoint for a bit, because I know that you like to talk about yourself. How much volume did ThreePoint do in Ontario last year?
So I think we were just a shade over 120 million.
And you started in February.
Correct.
And the year before, how much volume did you do here?
I think it was about 35 million.
So I seem to think that the people at ThreePoint hired well, but it also tells me that they listen.
Yeah.
And based on the relationships, I mean, I didn't know you before ThreePoint, and I've been in this industry for 18 years.
Yeah.
And so I think that based on your relationship with people, you're willing to push the envelope a little bit, and they're willing to listen, which tells me that if ever there's going to be change, it's going to come with ThreePoint. What is a piece of advice that you have for brokers as we continue into the year?
Don't necessarily pigeonhole yourself in terms of the types of clients that you deal with. Like, I've had a lot of agents, a lot of brokers that, you know, I've kind of tried to introduce ThreePoint, tried to introduce private lending to, and they're very non-receptive in the sense that...
Why are people so afraid of private lenders?
I don't know.
I'm never going to lose a deal to the bank.
Yeah. So like a lot of agents are like, nah, you know, like I like to play in my little monoline sandbox, and I don't really deviate from that. And it's like, well, do you realize like how much volume you are, pardon my French, but pissing away to other...
It's not even the volume. I mean, most of the people that I hang out with in this space, the volume is great, and you can make a lot of money in this industry. But for me, it's about relationships with my clients. And those that we use with transitional lending, like ThreePoint, and then we help them out of the situation to an alternative space or an A space, those are your clients for life. And those clients we have the most impact with, the biggest relationship with, but also they become your raving fans, and they're your number one cheerleaders. Yeah. So if you service them right, you don't really have to spend a lot of time marketing, right? So I think that it's really important for agents this year to take a look at their book. And if they don't diversify it, then they maybe should start.
Yeah, 100%.
Want some lightning round questions?
Oh, okay.
What's your coffee order?
Oh, see, everyone always makes fun of me because I personally do not drink hot coffee. So I'm always like, if I go to Starbucks, it's like an iced shaken espresso.
I had one of those yesterday.
Yeah, there you go.
Have you tried the protein lattes?
Yes, I have.
They are so good with 23 grams of protein.
And the new one I just tried is the Dubai chocolate.
Is it good?
I personally like it. I get it a little less sweet because they like to pump that stuff in there, but
I feel like I need to try it, but the diabetic in me is saying I should probably stay away.
I know.
Fastest approval you've ever seen?
Fastest approval I've ever seen. I mean, with our broker partners, because we have relationships with some key partners that tend to send us a lot of business. Like I've seen, you know, Tanya or Brad pick up a file and within half an hour, the commitment's already out.
Funniest reason a deal couldn't proceed or had to be reworked?
Actually, funny enough, there was one time I saw an appraisal where the guy had actually anchored a barbecue to the window on the side of the house.
Really? Because he didn't have a deck.
Didn't have a deck, and I guess he didn't want to go outside. So
that was creative. Could you imagine what he'd do to pay his mortgage?
So literally, like, you would slide the sliding window open, and the barbecue was right there, and it was like one of the weirdest appraisals I'd ever seen.
That would be an insurance hazard. Did you do it, or did you maybe get it taken down and then do the appraisal?
I mean, yeah.
If ThreePoint had a theme song, what would it be?
Oh, I don't want to brag, but I'd say like We Are the Champions right now.
We Are the Champions, okay. I love that. You should absolutely brag. This is the 3-Point Show. One policy you change if you could.
One policy that...
It doesn't have to be your policy. It could be any policy in the industry.
I would probably honestly change the stress test.
If you weren't in the mortgage space, what would you do for a living?
At one point in time, I actually wanted to be a hockey agent.
Okay, that would be fun. One lender myth that needs to die today.
A lot of people seem to think the misconception with privates is like, it's only for people that have double bankruptcies and really bad credit and no income. But as we talked about earlier,
that's actually my favorite.
It's even, just a normal guy that on paper you would think qualifies at the bank.
Sometimes there's a reason we need to go to 3-Point.
Yeah.
What is the wildest can you make an exception you've ever received?
Well, one deal we actually funded for MPFG actually was a house where it was tenanted, and I guess they stopped paying rent. So they tried to get the tenant out, and they completely trashed the place, and everything had to pretty much be ripped down to the studs. And we still wrapped our heads around doing that deal.
It's because it was an MPFG file.
Yeah.
That's why relationships matter.
100%.
On a scale of 1 to absolutely not, how do you feel when someone calls you who hasn't looked at your rate sheets or product offerings?
Oof. I would say not, like a big fat 0 to the people that do that, because again, we're very transparent. Everything regarding 3Point is available publicly on our website.
But I call you all the time and say, Justin, what's your rate?
Yeah, it's true.
So now you're telling me you're annoyed when I do that, huh?
I mean, that's the beauty about 3Point is like, there's really no guessing with us. Like there's a lot of lenders out there that it's like, hey, like really
rate start at.
Yeah, super amazing promo that we're starting at $599, and then it's like I submitted a deal over there and I got the commitment and now it's $899 and I don't know what happened. Whereas with us, like if it fits a certain bucket in terms of loan to value, that's the rate you're getting. There's no guessing.
If you could ban one type of deal from ever hitting your desk again, what would it be?
Something to do with like a foreclosure rescue, because anyone that deals with us knows like that's really not our cup of tea. So
I actually thought you would say an A deal.
Yeah,
because a lot of lazy brokers out there don't structure the deal properly and send it to you guys because they're too lazy.
Well, funny enough, I actually have a friend that came to me. He is an insurance broker now, but he used to work as an employee at a large, actually Desjardins Insurance. So he was actually an employee there, decided to go out on his own, start his own brokerage. He calls me up. He says, hey, he's like, I know you're in the mortgage industry. And he's like, I've been working with this mortgage agent. I really want to buy this house, but I don't want to put 20% down. And he keeps telling me I have to go on the B side and put 20% down. I said, really? I was like, why? I was like, what's your, like, is your credit bad? He's like, no, like we're both like have really good credit scores. And it's like, my wife has a job and like, I just started my own brokerage. And he's telling me because I just started my own brokerage as an insurance broker, I have to go B side. And I'm like, what? I was like, that's not how this works.
Know your products.
So I literally called up, someone that I know, and I was like, hey, like, this is the situation. Pretty much playing mortgage agent at this point. And I was literally like, my friend's going to call you. I'm like, this is a situation. And I was like, I know for a fact that Sagent and CMHC both have a enhanced BFS program.
They certainly do.
That under 2 years, but he's in the same industry, so he can qualify as a high ratio mortgage. So submit it to XYZ and it'll get approved.
CMHC's is better. They do 6 months.
There you go.
Which is worse? A deal with no story, a deal with no documents, or documents submitted 2 days before closing?
Oh, I would probably say documents 2 days before closing, because you're just putting way too much stress on yourself.
No story?
I mean,
how do you choose?
I know, but like you're putting so much stress on yourself and the client.
That's fair. What's one thing brokers think impresses you but doesn't?
The amount of volume some of them do.
Right?
Egos
as large as volumes.
For me, like I've always been someone that is a huge relationship guy. Like as a BDM, like sure, like we're going to target offices and brokers that do a lot of volume. But for me to like walk in a room and like, that's the first thing you say to me, or it's like, oh, you don't know who I am because I did XYZ last year. Like to me, that just like so off-putting to me.
I don't care how much volume you do. If you're not a decent human, I don't want you in my space.
Yeah, for sure.
If lenders had a private group chat, what would everybody be complaining about today?
Well, a little fun fact. I mean, some of us BDMs do have group chats, but
okay. So what are you complaining about today?
Probably those types of agents that shop around, because sometimes like we'll be like, can someone do this deal? And it's like, oh, I saw that deal, or I saw that same deal last week. So
that's
it's like
hilarious.
Someone that just whores out a deal to all the lenders. Like that is my biggest pet peeve.
What's the funniest reason a broker has given you for why a deal must close? Absolutely must close in 48 hours.
I mean, you always hear like these stories of like, I got to pay my ex-wife in 2 days, or I have to buy this new car in 2 days. Like,
I mean, that's what happened when I bought my car.
Really?
The dealership called me and said, I've got this car coming off of the truck. There are 2 other people that want it, so you need to come and buy it now. Otherwise, you're never going to get it.
Wow.
So what did I do? I dropped my shit. I went to the dealership. I bought a car. I didn't even drive. Nobody said I was smart.
Okay.
If you had to create a new tagline for 3Point based on how brokers actually use you, what would it be?
I would just say the lender you can trust.
I actually like that one. What's the most dramatic reaction you've seen when you've quoted a broker a rate?
This might be surprising, but it's like, really? That's it?
I mean, that's what I expected you to say. And also, you shouldn't have to quote rates because we should look at your product sheet because the rates are on there and you're fully transparent because it's open to the public. Anyways, if you could send out one anonymous message to every broker in Canada, what would it say?
Probably hype up ThreePoint. I'd just be like, hey, have you heard of this ThreePoint?
Where can brokers reach you to learn more about your products?
They can go on our website at threepointcapital.ca, or you can reach me at justin@threepointcapital.ca, or by phone, Facebook Messenger, Instagram. If you have an owl that sends off messages, I will accept them that way too. I'm usually pretty accessible. That's one of the biggest things for me, is just always being there for my brokers and agents, no matter what day or time, obviously within reason. But
that is fair. Any final sweet spot wisdom for brokers listening today?
Honestly, I would say, don't be afraid to give us a try, or even just give private lending a chance. If you're someone that doesn't do a whole lot of it, I would love to chat about those types of deals, even if it's not necessarily something that we're going to do at ThreePoint. I'm someone that's, loves building relationships, and, hopefully one day you might fund a deal with us.
Thank you so much, Justin. I appreciated our time together today.
I appreciate it as well.
That wraps up another episode of the Mortgage Sweet Spot Lender Edition. Huge thank you to Justin for the insight and honesty and lender side wisdom. If you enjoyed this episode, share it with a broker who needs a little sweet spot clarity in their life. Thanks for tuning in, and we will see you next time.